What's up, everybody? My name is Zach Hartley. Today we were looking at technical analysis and we're focusing on volume. So what is volume? Volume is the number of shares traded within a given time period, and you can look at it as the shares traded on that time period, or you can look at it as an average trading volume over the last X number of days. Those are the two ways that it's commonly represented, and there's two reasons you might want to consider looking at the volume when you're investing and making trades. Number one is liquidity. Now, here's a stock price I pulled from Tesla Inc. This was literally off Yahoo Finance today. It is April 7th, and they traded 17 million shares today. They have an average trading volume of 21 million shares. That means 21 million shares are being traded and executed on a daily basis. Now, if we look at another company, this is one in Canada called MindMed. It's a little biotech pharma company, small little outfit here in Canada, and their volume is only 402,000 shares per day. So it's less than 1/30th of what Tesla is. And why this is important is because if you traded Tesla, and let's say it's $300, and you put in a trade to execute, you're probably going to execute at a trade within 1 or 2 pennies of Tesla. So not really a big deal because there's that much volume going back and forth, so you can execute that trade easily. When you go to trade a small little biotech company or a small little startup that only has a couple 100,000 shares trading per day, what it means is there's less volume. So for you to execute your trade, if you want to buy a couple thousand shares, for you to execute that trade, it may not execute right at 40 cents where we're quoted today. It may execute at 41, 42, 43 cents because there's just not a volume to fill your entire trade at that given price level. So you may have to pay more, you may have to pay for it in chunks, and it may take longer for you to actually execute that trade. Now, the reason this is important is because if you're 2 or 3 cents off on Tesla that's at $300, it doesn't really make much of a difference. But if you're 2 or 3 cents off on a stock that's only 40 cents, that's 2.5%, for every percent that changes. That's a big difference. So it's one thing to keep in mind because it really comes down to liquidity as well. Can you get out at the price that you want? A stock is generally considered very liquid, but you do need a little bit of volume on that trading day in order to get the price that you want. Now, what I mean by liquidity is the ability to convert your asset into cash. So if it's a stock, you can trade it on the market that exact day. You can pull out that money and you can convert it into cash very easily. It's a very liquid asset. In comparison, real estate is not a very liquid asset. For you to sell your real estate, you have to put it on the market, you have to get people to come look at it, you have to get a bid, you have to make a contract, and you have to close a deal. It takes a while to sell your real estate, and hopefully you get the price that you want. There's no quote or market that you can actually go to. So it's considered a very illiquid asset. Now, the reason I bring this up is because those larger companies are going to be much more liquid, and the ones with the higher volume will be much more liquid, allowing you to get better trades at the exact price that you want in comparison to a couple cents off. Next, volume can also help you figure out if a trend is confirmed or if it is a little bit iffy. And what I mean by that is you can look at the volume and the changes in volume each day to say, is this a strong movement in the stock? So when we look at Apple, this is taken up to today, April 7th, and we can see a clear bullish trend all the way here until February, March. And then what we see is the stock absolutely drops off here around April or what is that, February 22nd, February 24th kind of mark. We see 1, 2, 3, 4, 5, 6 really strong down days that finishes the stock at around the $250 mark. Now, this is really important because what you want to figure out is this just a dip where I should buy on the weakness because I think it's going to go up, or is this a fundamental change in the trend of the stock? And how we're going to decide that is by looking at the volume. The key here is that when the volume increases period over period, it means that the trend is confirmed and it's strong. If the volume decreases, it means that the trend is not confirmed because it's very weak. What I mean by that is if the stock goes up by 5 or 10%, and not many people are buying it at the 5 or 10% increase, it could be because they don't actually believe it's actually worth 5 or 10% more, which means it's never going to be worth 15 or 20% more. However, if that stock goes up by 5 or 10% and the volume drastically increases, it means people really believe that it's probably worth that 5 or 10% more, and it could keep going that way in the future, especially if more people start to believe that. So that's the fundamental principle of what's actually happening in reality here. So when we look at this stock, we see the end of February here, the stock completely drops off and the volume drastically increases from about 30 million to almost 100 million shares per day. We see a direct correlation. The stock plummets, the volume drastically increases. What that means is, I think we have some issues here. I think we're seeing a trend reversal. I think we're starting to go the other way. I think that this stock is falling, the volume's drastically increasing. That means that we could be seeing a strong downward trend here. So we come all the way down, we hit this 259 mark, and then we see 1, 2, 3 positive days of the stock actually increasing in price, and in correlation we see 3 lower and lower and lower days in volume. What that tells me is this probably isn't another trend reversal. This probably isn't the stock drastically changing directions. I think it's going to continue to go down because it just doesn't have the volume and the strength behind it. And that's exactly what happened. So the stock continued to go down for the next basically 15-20 days here, and from that point we can see a basically consistent increase in the volume. It levels out at around the kind of $75 million mark here, and then again right at the end of March we can see the stock price start to increase, and we can see that volume decrease again. We can see it drastically decrease as soon as that price starts to increase, and it tells me we're probably not seeing another trend reversal here. We're probably going to be either trading horizontally or we're going to continue downward for at least a little while unless something drastic happens. So we get to the end of the chart here and it kind of bottoms out, and we have a lot of movement on these last 2 days here. That's mostly because of the COVID pandemic and how it's ravaging the US right now. Nobody really knows what's going to happen, especially as China starts to come back online and it feels like the US is falling off the edge with this COVID thing. People are really trying to figure it out. What I also want to point out is, as soon as there was unsettlement or unease in the market, what we saw here at the end of February all the way to today, the volume has almost doubled. I find this really interesting because it means more and more people are making trades in and out of the market. I think from the point here to where we're at today, we've clearly seen a lot of red days. That means more people are selling than they are buying. So I think it's going to be a tough little ride here for Apple. We could be seeing a breakout of the trend line, the support line that we basically connect from here to the top. But we'll see how this goes. We had the same volume as yesterday and a drastically lower close than the open today. So not a great sign, but we'll see kind of where we end up. So I'm definitely keeping my eye on this chart. We've got high volume right now, but all of the trends between the price and the volume are pointing in a downward direction. So just to summarize, you use volume to make sure that you have liquidity in your trade, and you make sure you can get in and out of your trades at accurate prices and the level that you want. You do that by just either trading stocks with at least a couple 100,000 shares traded per day, or knowing that you may not be able to get the price you want if it's any lower than that. Secondly, an increase in volume signals that it supports the trend that's happening. A decrease in volume does not support the trend that's happening. So if a stock is going up and the volume is increasing, those are two good signs. If the stock is going down and the volume is increasing, you're probably about to see this stock continue to go down at least over the next little while. So anything can change, nothing is perfect, but this is a tool that you can use to just give you one more signal in your decision of should you buy, sell, or hold this stock. So lots more to come. Thanks for joining.